Hi, good evening, everyone. Nice to see you again. I'm Amy Lei, a stock trainer at Homely Chart Company, which is a stock training school. And today's video is the 13th of my channel, Amy Stock Analysis Daily. And the topic today is IQIYI, jump up. So what to learn? Okay, so this is the chart for IQIYI. The code is IQ, right? Nasdaq, listed in Nasdaq, and we can see that this upward gap here. That's 16th June, right? So 16th June, the market gap up, open, then drop a bit, but still the closing price remain far away from the closing price of the previous day, leaving us a very big upward gap. And last night, the price opened low but closed high, right? And the open price last night is still above the low price of the previous gap up candle, right? So this is all about the gaps. So gaps actually is a very interesting phenomenon in the stock market, and there is a lot to say about gaps. So today our topic would be about the gaps, what we can learn from the gaps. Okay, so firstly, if we want the gap is to be successfully formed, usually we need two conditions to be satisfied, which are, firstly, the price should gap up, open for an upward gap, and or gap down, open for a downward gap, right? This is the first condition. But there is a second condition, which is the gap must remain when the market closes. For example, if we go back to the chart for IQIYI, let's say 16th June, the market gap up open, right? Gap up open. If the drop for that day is a very, very big one, and the price a close around the close price of the previous day, 15th June. So that's not possible, right? Such a long bearish candle, that's not possible, but I'm just showing you an example. So let's say if after the upward gap, open with upward gap for IQIYI, if the price continue dropping all the way, and when the market close and at the same price level of the close price of the previous day, then this is no longer a successful upward gap, right? So firstly, let me summarize here. Firstly, we need a price gap up, open for an upward gap, and if it's a downward gap, we need a price gap down, open, right? But that's not enough. We also need the closing price higher than the than the close price of the previous day. That's for the upward gap. And if it's the downward gap, we need the closing price lower than the closing price of yesterday. Okay, so in a word, we need a gap between the body of the second candle and the body of the first candle. You see, we need a gap between the body of this candle and this candle, right? So this is a upward gap. If it's a downward gap, it's the same thing. We also need a empty space between the body of the second candle and the body of the first candle. Okay, so that's the conditions to be satisfied if we want successful upward gaps or downward gaps. Okay, and then Secondly, we need to know that the gaps actually can fully demonstrate the function of open price. We know that for a trading day, the most important prices are open price, high price, low price, and close price, right? And have you ever imagined, or have you ever thought about the real meaning or the function of open price, the role played by open price? Actually, open price, it indicates people's expectations. Okay, so it's very important. Open price can indicate people's expectations. Okay, so for example, if we go back to the chart, okay, do you know why for IQIYI we have such a big upward gap on 16th June? Actually, because during the daytime, Tencent has announced that it is planning to become IQIYI's biggest shareholder, and people are speculating about a possible merge between Tencent and IQIYI. Okay, so that's the reason actually stimulate the price to give us an upward gap. Okay, so means people have a high expectation about the possible merge between Tencent and IQIYI. Okay, so you see the open price, upward gap up open, it reflect people's high expectations or good expectations about the future price movement. And then another example is, do you still remember that in my previous videos I talked about SGX, right? We talked about the SGX, this big downward gap. You still remember? We have talked about this sudden big drop for SGX on 27th May. The price gap down open, and after that continue dropping further. And what's the reason? The reason we all know from the news after that, and actually it's before that, before the downward gap, before the market open on 27th May, we have known the news that SGX has lost its license for some derivative products from MSCI, right? So that's the very bad expectation. That is the bad news, and people are expecting that the future should be a worse for SGX, and that's why we have this we have the price gap down open, because of people's expectations about future performance is negative. Okay, so this is the function for open price, the function of open price. Okay, then let's continue to check some other important info related with gaps. Okay, and then thirdly, the function of gap. The function of gap, actually, before the price return back to the gap, it acts as magnetic. Means the price tend to move back to the gap area. Okay, so then when the gap already covered, usually it would act as strong resistance or support. So we can check some real examples. Let's say this is as SGX. So maybe IQIYI first, because that's the main topic for today, right? IQIYI. Okay, so we see because currently this gap just formed. Maybe we find some other examples, historical, so that we can check the historical performance. Let's say our indexes. How about FSTI? Okay, so for FSTI, can you see that when the price give us a very forceful rally until 8th June, okay, 8th June, at this candlestick, we see the previous downward gap here covered, right? So before the price go back, return to the level, the gap is acting as magnetic to attract the price to go up, to touch, to cover the gap. So when the price reach a low point and begin to rebound, this gap is acting as a magnetic, right? So we see the price moving toward the gap because it's a magnetic. It would attract the price to be close. Then, yeah, here when we see at this moment this bullish candle actually already covered the gap, and this is the candle before the downward gap, right? So usually the high price would be the high price of this bearish candle would be the final defense line. Usually the resistance around the closing price or the high price is the strongest. Once the gap is covered, now this previous candle here is acting as the very strong resistance. Sometimes if the upward momentum is not so strong, immediately when the downward gap is covered, the price would drop first, would drop. Yeah, but for some cases, if the upward momentum is very strong, the price might continue going up to reach the high price or open price if it's a bearish candle, or close price if it's a bullish candle of the previous candle before the downward gap. Okay, so here we see the price haven't yet touched. It touched the close price, right? It touched the close price of this candle previous to the downward gap, and then drop, right? So once the gap is covered here, the downward gap covered here, acting as very strong resistance. This is for STI. If we continue to check Hang Seng, one thing I forgot. So let's say in future there is another rebound in future, and of course this still would be the significant resistance level. And don't forget, above we also have another downward gap, right? So means this gap for future rebound is acting as magnetic. But once the price reach the gap and the gap is covered, the bottom or the low or the open price of this candle previous to the gap would be the very strong resistance. Means it's the future target price for a rebound, for potential future rebound. Okay, so this is STI. If we check Hang Seng Index, you will see the same phenomenon. And can you see here, before this big not a very big rebound, but before this rebound, this previous downward gap here acting as very strong, acting as a magnetic to attract the price to move toward it. And then once the gap here is covered, you see, gap is already covered, begin to drop. You see, for Hang Seng Index, we also can know that it's weaker than STI, because you see, for Hang Seng Index, it can just when the price reached the low price of this candle previous to the gap begin to drop. But for our STI, it can be stronger to reach the open price of this candle previous to the downward gap. You still remember just now we checked. After the price reached the bottom of the key candle, then continue rising further to touch the close price of that it should be open price, because that's a bearish candle. Open price of this previous key candle. Okay, so Hang Seng Index weaker, so resistance then drop, right? Then drop, and in future, this gap already covered, but above we have another, right? So this also would be a future resistance level, and should there be a rebound in future, a possible rebound, this gap is acting as a magnetic. Okay, and also for Nasdaq, you see gap is a very very common phenomenon in the stock market, and it's very instructive. It can provide us a lot of valuable information. Let's say previously for Nasdaq, here we also have a gap, right? We also have a gap here, and we see the price give us a very forceful rally and to touch the resistance of the gap. Before that, before the price reached the level, it's acting as the magnetic to attract the price to be close. And then when the price, once the price reach upper shadow means resistance, then you see it begin to sideways around the level. See, this is the bottom of this gap, and don't forget about this previous candle before the downward gap, the high price, right? The final defense line, and we see the price consolidate for several days, and then see here break up the bottom of this previous candle before the downward gap, and then you see resistance, right? Reach resistance, drop a bit, but then directly break up. Once the price break up, means the upward momentum is extremely strong. Yeah, so the resistance here is not strong enough to push the price downward again. The upward momentum stronger. Okay, but interesting thing, in future, if there is a correction, when the price touch the level, it would act as very strong support. Then we see the price get support, right? Get support, then go up again. So you see, this is a very interesting phenomenon, gap. And if you continue to check Dow Jones, Dow Jones is quite interesting, right? So you see, previously here we have upward gap, and then the price drop to give us another downward gap, and the upward gap and the downward gap at the same level. This is another very special phenomenon. So what it means? It means that this area is a very key level. It's a very important level. So currently it is resistance, right? And we see the price didn't drop and then give us the rebound. Currently we see the price just drop a bit, then go back immediately. Now it's trying to cover the gap, but when the price already return back to the level, to the gap, it's very strong resistance. The resistance at this level is stronger because it's the same level for two gaps, one upward gap, one downward gap. Resistance extremely strong. What we know is in near future, if the price unable to cover the gap and turn downward again, means the downward momentum is very, very strong. We are expecting a much forceful correction in future. But if the price can break up the resistance level here and maybe hit maybe higher than the high price of this candle previous to the gap, means what? In future, the price would continue going up, upward momentum stronger. Okay, so that's what information we can get from gaps. Okay. Okay, so repeat again. Before the price return back to the gap, it acts as magnetic. But when the gap already covered, would act as strong resistance or support. If price below the gap and the price reach the gap, that's resistance. But if the price above the gap and the price reach the gap, cover the gap, and then strong support. Okay, and then finally we want to get some trading skills, learn some trading skills based on gaps. Let's just check the performance of IQIYI. IQIYI, I know this is a popular candidate for many people. Many people are paying attention to IQIYI, right? And how can we trade based on this upward gap here? Firstly, we know that for this gap, if in near future never cover, the price never drop below the low price of this candle, which gave us the upward gap, low price of this candle, then means that the upward momentum is still very strong. It might go up, continue going up for a while. And then in future, if the price give us a correction, and if the correction already reached the level again, so this would be a very strong support. Then also you need to know that all the gaps must be covered in the stock market. So it's just a matter of time. For some shares, the gap can be covered in a very short time. For some, it might be covered after a very long time. If it was covered by a short time, for example, for IG, if this gap is covered in near future, means the upward momentum is not that strong, at least for short term. But if the gap here remain, the price never drop below the low price of this gap, means upward momentum is quite strong. Okay, so this is the first information we can get based on this upward gap. And then let's say in near future price really above the low price of this candle, never drop below, right? And based on the current situation, we know that this is a long bearish candle. We always can check the half level of a long bullish candle or bearish candle. So in near future, if the price unable to break up the half level here, then means it's it's still a bit weak for short term. Better stand set lines. But in near future, if the price can break up the half level, maybe you can try for short term trading. You see, the following day, last night, the price attempt to break up the half level, but still in the end failed, close a bit lower than the half level, means this level is the strong resistance for short term, right? And in near future, you pay attention to two levels, means first level is the low price of this this candle, which gave us the upward gap. The second level is the half of the candle's body here. In near future, price above this level can try for short-term trading. If never break up, still keep set lines. If price drop below, remember this is the defense line, price drop below It's very high probability price will continue dropping further until the gap is covered here. Means once the price break down the low price of this candle, our future target level or future strong support should be here. The high price of the candle before the gap, or the closing price. Closing price, high price, right? Okay, so that's how we can trade based on the gap for IQIYI. Okay, so today I mainly shared with you some valuable knowledge about IQIYI and some trading skills. Valuable knowledge about the gaps and some trading skills based on gaps. And the example is the main example in my video today is IQIYI, right? So IQIYI in future still might have opportunity. So if you want to trade, yeah, you can try to trade based on the gaps with the method I have shared with you today. Okay, so that's all for today's video, and looking forward to seeing you tomorrow. If in the end, if you like the video, don't forget subscribe and give me a thumb up, and also can share this video to your friends. Okay, so see you tomorrow. Bye bye.